Hello. Good morning. Hello. Hello. Can anyone hear me? Can anyone hear me? I need to know if anyone can hear me. Can you send me a text message letting me know that you can hear me? Oh, okay, great, thank you. Can you see the presentation? Okay, just let me know if you can see my presentation. Okay, great. Thank you so much. And my apologies for the delay. I had technical difficulties. So here we go. Okay, so this is Financial Qbits, hyper-fast financial training. Learn the fundamentals of finance and accounting in a purely visual way. Normally, to learn the fundamentals of finance and accounting, it is completely textual. You have to read thick textbooks to understand it. But with Financial Qbits, it is completely visual. All the information is encoded in simple geometric shapes, and that makes it very, very easy to understand. What you would normally learn in about a year, with Financial Qbits, you can learn it in approximately 10 hours. So here we go. And that, of course, the fact that normally it takes a long time to learn with a traditional model is a problem. So what is the problem? The problem is that most people in the business world do not have a clear picture of how things work in finance and accounting, the fundamental language of business. The cause for this problem is that the current model, which comes to us from Luca Pacioli from the year 1494, on which all financial training programs are based upon, lacks a clear schematic explanation. It is a very fuzzy picture that is hard to follow. The solution: a clear holistic financial structure which would contain all the traditional concepts and their relations in a purely visual way. This would shortcut the time and the effort to learn finance and accounting because, quite honestly, pictures speak better than words. And we have that picture. So, why is the traditional map so difficult to grasp? One word: complexity. It is extremely complex. You have countless concepts that can relate in countless possible ways. And that's the way that we learn everywhere. All finance and accounting training programs are essentially based on Luca Pacioli's model from 1494. And this, of course, taxes the access to financial education. How can we simplify this financial map? Well, we would simplify it by finding the underlying network structure, which would contain all the traditional concepts and their relations in a purely visual way. And this is that picture. It is a double entry network, and this makes it so much easier to understand. Here, a finite number of players relate in a finite number of ways. The new map is a bounded stage where all financial action takes place. It is actually a two-story structure. So on top, we have, for example, the assets. And underneath, we have current assets, fixed assets, and other assets. To the right-hand side, we have funds on top. Funds are made up by short-term liabilities, long-term liabilities, and owner's equity, and so on and so forth. So the top part of the map is the panoramic view, and the bottom part of the map is a detailed view. The simplicity of the new map eases the access to financial education. Unification changes everything. If we see the picture on the left-hand side, and we would want to know what it is a picture of, well, it's very difficult to know what it is a picture of because it is very scrambled. If you want to take a guess as to what it is, you can go ahead, but essentially, this is what it is. The point is that even though the information is exactly the same, the fact that the one on the right is unified or coherent makes all the difference in the world, because you can tell right off the bat what it is a picture of. Whereas the one on the left, because it is fragmented, it takes a long time before you can figure out what it is a picture of. And it's exactly the same thing with the traditional model. It is not wrong in any way, it is just scrambled. The new map is coherent, and that makes it very, very easy to understand. Okay, everything here is in one map. According to a recent study done by the FIU Small Business Clinic, Financial Qbits is the only financial training program that's based on the new model. Virtually all other financial education programs are based on the fuzzy picture from 1494. That's the fuzzy picture from 1494. And even the top 10 business schools in the United States are still using the model from 1494. And we know because we call them through FIU. And this, of course, applies to the rest of the schools in the United States. In fact, there are no known exceptions. Everyone that we know of uses the traditional map. This is the visual syllabus of the program. Number 1, learn the new holistic map. Number 2, process financial information in a hyper-fast way. And number 3, evaluate the information also in a hyper-fast way. So here we go. Learn the new holistic map. To do this, we're going to learn the stage, the players, and relations that make up the financial map, the stage where all the action takes place. And to do that, we're going to divide the financial map into 4 slices to make it easier to digest. These slices are the 4 main quadrants, the 12 sectors, 30 typical players, and the 12 fundamental double entries. Once we understand the 4 slices individually, we're going to bring them together as one. And that's our decoder of financial information. Because all the information is encoded there, all the information we need to prepare the financial statements, then we can use it as a decoder of financial information, like I'm about to do here. So let's say that we have an event like, let me go back actually. So the events like an owner's contribution, making a bank deposit, purchasing inventory on credit, selling, making a sale, etc., all the answers to these problems in terms of debits and credits can be found within the bounds of this map. And once we find it here on the map, we have cracked the message, and it's easy for us to know where it goes on the income statement, the balance sheet, and also making a record of the transaction on the journal entries. So, for example, say that we have an owner's contribution for $10,000. It's easy for us to know where it is once we take the course. And by doing so, we start populating the financial statements, one double entry at a time. You can think of the double entries as the atoms or the pixels that make up the financial history of a business, and so on and so forth. So this part helps participants understand the meaning behind the numbers in financial statements, one double entry at a time. Once we process one period worth of financial information, we stack the individual events together to evaluate them as a whole. And this is where we go from accounting to finance. Accounting, we can think of it as the individual frames that make up a movie. And we can think of finance as the whole movie, the whole story of your business for one period of time. And then we do some financial analysis like ROI, like current ratio, etc. Okay, so the syllabus in a nutshell: number one, learn the new holistic map. Number two, process financial information in a hyper-fast way. And number three, evaluate the information in a hyper-fast way. The learning objectives are: number one, speak the language of accountants in record time. Number two, understand the philosophy behind systems like QuickBooks. And number three, truly understand the meaning behind the numbers in financial statements. And finally, number four, perform basic financial analysis to evaluate the condition of a business. All in about 10 hours. Okay, the summary: time to grasp, the old one, at least 1 year, the new one, approximately 10 hours. The size of the model: the old one is 1 textbook, and the new one is 1 diagram. The presentation: the old one is text-based, and the new one is shape-based. Okay, I'm going to close out the presentation really quick just to see if there are any questions. Okay, so I see no questions, so I'm going to go ahead with the presentation. Okay. Okay, Qbit Solutions research team presents Financial Qubits, Hyper-Fast Financial Training. Chapter 1, the business scenario. Part 1, the static scenario. Section A, the 4 main quadrants. Let's start from the beginning. What is a business? So I don't mean a specific business. I mean, what is the concept that would describe any and all businesses? And I don't mean a textual concept. I mean a visual concept. How can we draw a business? Can a business be drawn? If I were to ask you, what does a boat look like? And you draw that, yeah, sure, that looks like a boat. If I were to ask you, what does a car look like? And you draw that, sure, that looks like a car. But a business is a little bit more difficult to draw because it is more abstract. But the fact is that a business can be drawn. And the reason why a business can be drawn is because all businesses are investments. In other words, a business is a bet. You risk wealth today, hoping to have more wealth tomorrow. So it would look like that. This is today. You place your bet. There's uncertainty. Every time you make a bet, there is uncertainty. That's what bets are about. And you're hoping to have a gain sometime in the future. That's tomorrow. Okay, that's the financial period. That's the time frame under analysis. And this is the stage where all financial action takes place. What financial action? An owner's contribution, a purchase of inventory on credit, a cash sale, a rent payment, and a payment of dividends to owners, to name a few. They all happen within the confines of these bounds. So all action occurs within the confines of A and B, A being the bet and B being the gain. The relation gain-bet gives us the general profitability of the business. In this case, 10,000 divided by 100,000, then we would have an ROI of 10%. Financial periods can be divided into months, quarters, or years. Here we're dividing it into months. So we have January, February, and March. The reason why it goes into a spiral like that is because at the end of each period, it's as if we ask ourselves, how did we do this period? Should we withdraw or should we bet again? Let's say that we did pretty good, so we bet again. And then we ask ourselves at the end of the period, how did we do? Should we withdraw or should we bet again? And that goes on and on and on. Bet again means to reinvest. Okay? But how can we know if we should withdraw or bet again? In other words, How can we improve our financial management skills? Improving financial management begins by understanding what goes on within the path AB. Can anything happen within the path AB? And the answer is no. There is a clear predetermined structure that tells us what can and cannot happen. To appreciate the simplicity of a business, we need to see it from above. So we have the bet and we have the gain. So we understand bet and gain, but what happens here, what happens here, and what happens here. To see it in a first-person perspective, what goes on beyond the horizon? The better you understand what goes on in there, the better your chances of success in a business. Okay? And the better you understand what goes on in there, the less of a gamble you take when you invest in a business. So to understand it, we're going to follow the trail of the investment at every step of the way. And for this, let's suppose that as business partners, we invest $8,000 in the business. $8,000 come out of our pockets, and those $8,000 become the business or the business's assets. Now let's suppose that we need an additional $2,000 and we reach out to the bank. The bank lends us $2,000. So now there's $10,000 in the assets. Now let's suppose that the products or services that we offer get the attention from the market. And people, in order to obtain what we offer, they give us their wealth in exchange. And those are, of course, customers. They give us money. So the wealth that comes out from the customer's pocket goes into the business's pocket in the assets. Okay. And finally, let's suppose that during the period, we have $1,000 worth of expenses. So 1,000 come out from the business's pocket, from the assets, and they go into expenses. 1,000 that go from the assets go into expenses. You can think of the money that's going into expenses as ashes. The wealth becomes ashes, and that's what expenses are. These are the four fundamental considerations to measure a business's performance. So, to measure a business's general performance in ROI, return on investment, we ask ourselves, what is the net income? In this example, the net income is the $3,000 worth of sales minus the $1,000 worth of expenses. So 3,000 minus 1,000, there's a $2,000 worth of net income. And our investment is $8,000 because that's what we put out of our pockets. So $8,000 worth of investment and $2,000 worth of net income. $2,000 divided by 8,000, that gives us our return on investment or ROI. It means that for every dollar we're putting into the business, we're getting a quarter back. 25 cents for every dollar that we're risking. Okay? From these four considerations, we derive the four fundamental accounts. The accounts are funds, assets, sales or revenue, and expenses. From these four considerations, we also derive the four fundamental accounts. These are the four fundamental accounts. All the complexity in any business, in any financial statements derive from just these four main accounts: sales, expenses, assets, and funds. The top portion, sales and expenses, that would be the income statement. And assets and funds, that would be your balance sheet. Okay? Sales and expenses give you the economic position of the business. How much are you selling minus your expenses? That's how much you're making. And the balance sheet is telling you what assets your business has and how these assets are being funded. Okay, each quadrant may be thought of as one of four main actors. So funds, liabilities, and owner's equity equal funds. And it represents the sources of wealth of the business. Assets represents the wealth of the business. That's your business's pocket. Sales represent your customer's pocket. The more wealth that comes out from your customer's pocket, the more wealth goes into your business's pocket in the assets. And expenses represent the wealth that got consumed. I'm going pretty fast because we have until 11:30. Okay, so these are the four main actors of the business scenario. If the company spoke, it would reveal to us the essence of each of the four main quadrants. So about funds, the company would say, sources of my wealth. About assets, the company would say, my wealth. About sales, the company would say, my wealth generation. And about expenses, the company would say, my consumed wealth. The company would also tell us that all the actors revolve around the assets. That's the one that has a connection with everyone else. And it would tell us that only the assets exist because you have cash, you have inventories, you have cars, you have tables, and all of that exists. The rest only exists on paper. Sales, expenses, and funds only exist on paper. Okay, what is accounting? As we have seen during the financial period, wealth outflows from the pocket of one player and inflows into the pocket of another. These inflow-outflow pairs are called double entries. Double entries are the bits or the pixels that make up financial statements or financial stories. For example, wealth outflows from funds and it goes into the assets every time there is an owner's contribution or any type of loan. And it goes on and on and on and on. Making a record of these individual transactions and recording them, making up the financial statements, is what accounting is about. Okay, and presenting this information. So finally, why keep good books? To answer this question, we need to answer what is finance and what is accounting. Could we draw these concepts and point out their similarities? Absolutely. So each period is made up by financial transactions like an owner's contribution, a rent payment, refinancing a short-term debt obligation, making a credit sale, long-term debt becomes short-term debt, provisioning of a light bill, purchasing furniture, reversing a rent payment, a credit customer makes a payment, sales return, provision, and dividends are paid out. So each financial transaction itself is made up by one or more double entries. Double entries are the inflow-outflow base pairs that weave the fabric of financial information. Stacking together these double entry transactions and evaluating them as a whole, we obtain the financial condition of our business for that given period of time. That's where we go from accounting to finance. So what is finance and what is accounting? Accounting refers to the recording of the individual transactions, the small picture. And finance refers to evaluating transactions as a whole, the big picture. So why keep good books? Because if the pixels or the individual transactions are not accurate, how can we expect the big picture, the financial part of the business, to be accurate? If we want accurate financial information, we need accurate accounting information. And that's the end of the first section of that program. And the next part is the derived players. Thank you so much. Does anyone have any questions?